All right, today we're going to break down the single most powerful system I use to manage my investments. Now, this isn't about finding the next hot stock. Nope. This is about building a system to protect you from your own worst enemy, your emotional brain. And we're going to use AI as our secret weapon.
Look, investing is a war, but the battlefield, it's right up here, inside your own head. It's a constant battle between logic and emotion. And this quote, man, it just nails it. If you let feelings drive your decisions, you are setting yourself up to stay poor. Simple as that.
And this right here perfectly illustrates the trap we all fall into. Come on, you've been there, right? When a stock like Nebius just shoots up 400%, you feel like an investing genius. Every instinct is screaming, buy more, I can't possibly lose. But then, a stock like SoFi drops, and suddenly you feel like a complete idiot. Your gut just churns, telling you to panic sell before it hits zero. That is the emotional roller coaster that absolutely destroys your long-term returns.
So the real question is this: how do you get off that ride? How do you create a process that forces you to be logical when your brain is just screaming pure emotion? Well, the answer isn't about having more willpower. It's about having a better system. And that brings us to the core of this whole strategy. See, instead of fighting my own instincts, which is a losing battle, I've outsourced the fight to a personalized AI agent, one that's designed to be my portfolio's toughest, meanest critic. You know, in the professional world, every big fund has someone called a chief risk officer, or a CRO. Their entire job is to be the professional pessimist. They look at the portfolio every single day and just ask, what could go wrong here? How can this blow up in our face? They are literally paid to find the hidden dangers that everyone else is too optimistic to see.
Now, a human CRO costs a fortune, and even then, they can still have their own biases. But an AI CRO costs next to nothing, and it is brutally, ruthlessly logical. It has no feelings, no ego, and zero emotional attachment to any of my stocks.
And let's be crystal clear about this, because it's super important. I do not use this AI to ask, hey, will this stock go up? That is a fool's errand. The entire purpose of this system is to stress test my own thinking, to interrogate the why behind my investment. It is a logic check, not a crystal ball. Okay, so let's get to the magic. It all comes down to asking the right question. And right now, I'm going to show you the exact prompt I used to turn a simple chatbot into a world-class risk analyst.
Here it is, and let me tell you, the wording here is absolutely critical. I tell it to act as a ruthless short seller to force it to take a negative viewpoint. I say ignore the hype to filter out all that market noise. And, most importantly, I ask for the single biggest risk. This gets me a focused, high-impact answer, not just some generic list of problems.
Now let's put this into practice. I used this exact prompt on my largest holding, SoFi Technologies, a company that totally divides the market. I needed to know if my conviction was based on solid data or just on hope. And look what it came back with. It wasn't a generic answer like competition is a risk. Nope, it gave me two specific data-driven threats. First, stock-based compensation, which means the company's issuing a ton of new shares to employees, and that can dilute the value for us shareholders. And second, macro execution risk. In plain English, that's a warning that SoFi's loan business could get hit hard if a recession causes people to lose their jobs. These are real, quantifiable risks. So now we have the data. The AI has done its job. It's exposed the weak points in the thesis. But you know what? Data without a decision framework is useless. This next step is what separates systematic investors from emotional gamblers. Once I have the risks identified, I force myself to choose one of only three paths. That's it, no other options. Option 1, trim the position, take some risk off the table. Option 2, accumulate, use the market's fear as a chance to buy more. Or option 3, hold and monitor, which means I accept the risks and just watch the data like a hawk. Trim, accumulate, or hold. That's it. It keeps things simple. So, what does all this actually look like when the rubber meets the road? How does this system of prompts and frameworks translate into real-world conviction? Well, after running SoFi through this entire process, after confronting the ugliest parts of the bear case head-on, this is the result. This is my position. Over 19,000 pounds in a single stock. That level of conviction doesn't come from hype on social media. It comes from having a system that actively tries to stress test your own beliefs. And honestly, this is the ultimate payoff. It's not even about the money. It's about the mindset. This system is how I can hold a volatile stock through massive swings without losing a wink of sleep.
It removes all that emotional guesswork and replaces it with a calm, data-driven process. It's how I can defend my long-term compounding.
So here's the bottom line. You can try to fight the market and your own emotions with just willpower, or you can build a system that does the heavy lifting for you. In the long run, the choice is pretty simple. The market is a system, and to survive it, you need a system of your own.